Okay, so let's see this question. This is an investment appraisal question from exam kit. This is a mock test question, so VIP co. So let's do this. Let's see the required first. Calculate the following values for investment appraisal: net present value, IRR, return on capital employed, ROCE, accounting derivative, same thing, based on average investment. Okay, so 11 mark question. Also, briefly discuss your finding from in each section of A above and advise whether the investment proposal is financially acceptable. This is 4 mark question, so very important. You have to discuss it. Okay, so let's read the question. VIP company, a large stock exchange listed company, is evaluating an investment proposal to manufacture product W33, which has performed well in test marketing trials conducted recently by the company's research and development division. Product W30 will be manufactured using a fully automated process which would significantly increase noise level from VIP company's factory. The following information relating to this investment proposal has now been prepared. Okay, initial investment 2 million, selling price $20 per unit in current price terms, so you have to inflate it. If it was nominal price, then you don't have to inflate it. Okay, expected selling price inflation 3%, so this is for selling price. Variable cost, current price $8 per unit. Fixed cost, current price $170,000 per year. Expected operation cost inflation 4% per year, so operation cost, fixed cost, variable cost both have 4% inflation. Okay, the R&D division has prepared the following demand. Okay, the forecast reflects expected technological change and its effects on anticipated product life. So it has 4-year life. Okay, it is expected that all units of product W30 produced will be sold. Okay, so there will be no scrap value, no residual value. In the company's policy of keeping no inventory of finished goods, that's important, no terminal value or machinery scrap value is expected at the end of the 4 years. When production of product W30 is planned to end. For investment appraisal, VIP company uses a nominal or money discount rate of 10% per year. Okay, target return on capital input. This is for this question. Taxation should be ignored. There is no tax given, so okay, fairly straightforward question. Let's try to solve it. Okay, so let's bring the question here. Okay, first is NPV calculation for 5 marks. Okay, NPV. Okay, so let's do the selling price first. Inflated selling price per unit. Also, we have to do some work. First, let's do the year. 0, 1. Also, let's check the dollar value. And okay, 4 years. You can center it if you want. Okay, also let's do the formatting. Click here or place Ctrl+1, same thing, number, third one. Okay, okay, selling price. Now inflated variable cost, cost per unit, and this one should be contribution per unit. Actually we have to write inflated contribution. Okay, and let's also do the units, which should be in dollar thousands, right? Okay, so let's write it down. Inflated selling price. Selling price is given 20, and we have to inflate it, so equals 20 into bracket start 1 plus 3%, and that's same for every year. So let's do power. Oh, actually we have made a mistake. It should be from here. This is for initial investment, so let's do it again. Okay, 20 into bracket start 1 plus 3% to the power year 1. So just drag. Okay, variable cost is $8 per unit for each year, so you can just drag it, and 8, and this is 4%, and drag, and inflated. Okay, we have to also do this. This is variable cost, so you have to put minus in front of it, so you can do the contribution. Fairly simple sum. Okay, we have contribution, inflated contribution per unit, and let's do the unit. We are taking 1000 in common, so 60, 70, 120, and 45 in here. Okay, and let's do 1000 in common from here on. And let's bold it or also center it to make it look nice. Okay, now we have unit and we have contribution, so we can have total contribution. Okay, unit multiplied by contribution cost, just drag. Okay, now we have inflated fixed cost, so in just copy it, that should be, and Okay, fixed cost is given 170,000, so 170, we're taking 1000 in common. Also we have to inflate it, so equal into same 1 plus 4% to the power 1. Also you have to do it minus because it's cost. Okay, inflated fixed cost. Now we can do taxable cash flow. So just sum of this, we have taxable cash flow, so sum bracket start bracket close, and you can just drag. Okay, we don't have any tax, so no tax need to working have to be done. Okay, so let's write the initial investment. Initial investment year 0, start with minus 2 million, that means 2000 because we're taking 1000 in common, and there is no, let's go back to, okay, found it, no terminal value or machinery scrap value at the end of 4 years. So even if there is no scrap value, we should still say there is no scrap value, so we should show the work. So scrap value of the year 0 is 0. We have to show this, otherwise you will lose mark, maybe half mark. Okay, otherwise you will lose mark, maybe half mark. Okay, so let's now do the net present value. Okay, now let's do net cash flow, which is from, you can just bold it if you want, not necessary. Okay, let's have to do sum bracket taxable cash flow and just drag. Okay, now we can do NPV, net present value, you can bold this. Actually I don't want to bold this one. Okay, so let's do net present value, and there's various ways of doing net present value. First you can do the discounting of this net cash flow, but to save time we can just use the formula. You can use the same formula in exam spreadsheet. So let's take the initial investment plus NPV bracket start, then it's asking for rate. So what is the rate here given? Rate given is money discount rate 10%. So this is our NPV rate. So 10%, you have to write in 10%, then comma, then the rest cash flow bracket close, and we have our net present value. So that is the answer of A, net present value. This is 5 mark. Okay, now we have to do the IRR. Okay, so B, IRR calculation. There's various way of doing IRR, but to save time we can just use the formula, or from spreadsheet. So we know the undiscounted cash flow. So this is the undiscounted cash flow. Okay, first we have to write IRR formula, IRR, bracket start. Okay, now we can take the undiscounted cash flow and bracket close. You can use percentage. 18% is IRR. Okay, so let's do the third question, which is ROCE or ARR, same thing, based on average investment. Okay, so let's try to do this. So ROCE calculation. So what is the formula for ROCE calculation? ROCE formulation calcula is profit before interest tax divided by average investment. So we have the cash flow. We don't have profit, we have cash flow, net cash flow. So from net cash flow, this is the net cash inflow and this is the outflow. So what we can do is we can just net profit. So let's do the total cash inflow, which is this. So I can just do sum of the inflow. So now we have total cash inflow here, and we can also do total. Now we can just do the profit. So we can just do the total accounting profit, which is inflow minus outflow. That is, and that will give us our profit. So equals inflow minus outflow is initial investment. Oops, we have to do this minus because it's in minus. So that's the way to do it. Now we have our accounting profit. So this profit is for 4 years because this is for 4 years total. So now we have to do annual profit. So we have to write, we can just copy it and edit it, average annual accounting profit, and we can do this divided by 4 years. So now we have average annual accounting profit. Okay, so now we have profit. So now we need average investment. So we have average investment this. So you can just do this, average investment. The formula for average investment is always investment divided by 2. So let's do the minus first, investment divided by 2, and now we have our average investment. Okay, so now we can put in the formula, which is profit before interest and tax. So profit divided by average investment. So ROCE, bold it, which is this divided by this 25%, and that is our answer. So yeah, if you can understand it, you can do it very easily. So it's all about practice, and also do, yeah. Okay, so let's move to the next question. Okay, so this is done. Okay, now this is interesting. Briefly discuss your findings in each section of section A above and advise whether the investment appraisal is financially acceptable. So interesting question. This is for 4 marks, so you have to do your work here to earn the 4 marks. And so this is the answer given in the solution, so just read it. You have to give a very precise answer here. You can just say that net present value is positive, so the project should be taken. You can just use write it easily. You have to elaborate, so just read it, pause the video and read it. And this is the answer, and understand it, and then you have to write it in your own way. So there is a lot of details in here. So okay, and for section C, this is 5 mark question. Discuss how the objective of VIP company stakeholders may be in conflict if the project is undertaken. So this is the answer given in the solution. Just pause the video and read it, so you will be well prepared for the exam. Okay, thank you for watching and good luck.